Welcome to this explainer. Today, we're unpacking a truly visionary deep dive into the terminal sovereignty thesis. We're looking at a structural audit designed specifically for the action-scientist movement. You see, we're talking about a portfolio built not just for retirement, but for a massive, long-cycle mission of cosmic education, specifically funding the Digitarium. Bringing a mobile planetarium directly to communities is no small feat, and it requires projecting into the ultimate bull case. We're talking about a world where Bitcoin achieves a staggering $1 million per coin and strategy scales to $10,000 a share.
But here is the massive roadblock we have to resolve today. Funding this grand cosmic mission requires a mathematically staggering percentage return in a vanishingly tiny window of time. When we run the statistical models and 10,000-path Monte Carlo simulations on the current highly fragmented architecture, well, we see a pretty harsh reality. Hope alone is simply not going to achieve terminal sovereignty. Your math has to be absolutely ironclad.
Okay, let's dive into this. Here is our flight plan. We'll track our journey from diagnosing a messy reality all the way to building a mathematically perfect wealth engine, covering the action-scientist mission, the illusion of diversification, the thermodynamics of capital, the sovereign chessboard, plasma recycling, and cosmic alpha.
Section 1, the Action-Scientist Mission. Reality versus gravity.
We have to ground our analysis in stark mathematical truth. Right now, this portfolio is trying to fund the Digitarium in a matter of months, and the organic probability of hitting that target, a mere 3.9%. Why? Because the current deadline requires a massive 154% portfolio return in just about 75 trading days. Unless you've got a crystal ball hiding in your garage, that is a statistical improbability. The simulation tells us we absolutely must extend our time horizon and restructure for a multi-year compounding mission.
Moving right along to Section 2, the illusion of diversification. Time to expose the ledger. Now, what's really interesting about this slide is what happens when we look under the hood. A seemingly diversified ledger of 178 line items is actually just a two-bet thesis. Look at the concentration here. Almost 48% of the entire portfolio is dominated by just two tickers, STRC and Open. The other 176 positions, they account for tiny, single-digit percentages. That's not diversification, you guys. That is effectively a financial junk drawer acting as decorative noise on a highly concentrated bet.
And the concentration risk goes even deeper. Despite direct spot Bitcoin making up less than 1% of the holdings, literally a rounding error, there is a massive 75% hidden correlation to Bitcoin's price action through derivative income funds. Think about that. You are absorbing almost all the downside volatility of Bitcoin, but mathematically capping your upside participation. It's kind of the absolute worst of both worlds.
Section 3, the thermodynamics of capital. This is where physics literally meets finance.
In the Action-Scientist Runtime, we don't view capital as just fiat currency. We view it as energy. Bitcoin is the ultimate baseload asset. It's fundamentally stored thermodynamic work mapping to roughly 3,353 gigajoules of expended energy per coin. And because it transmits at the speed of light without counterparty risk, it is true multiplanetary capital. Seriously, if you're envisioning a future of lunar hotels, Bitcoin is the verifiable medium of exchange you'll be using to pay for your zero-G room service.
Which brings us to Section 4, the sovereign chessboard. Let's map out this engine.
I want you to think of your portfolio like a giant chessboard. The king stays safely on its square. This is your self-custodied, direct spot Bitcoin. It doesn't move, it doesn't get traded. Meanwhile, your other pieces, the pawns, knights, and rooks, they act as high-yield fuel tanks. Assets like STRC, Open, and SATA are the engines deployed out onto the board to capture all the messy volatility of the market.
We organize these pieces by their phases of money. As you can see, your solid state is direct spot Bitcoin, pure accumulation. Your liquid state represents compounders, like nuclear energy infrastructure. But your plasma state, that is all about daily yield. These are the volatility harvesters that throw off massive double-digit percentage cash flow.
All right, Section 5, the plasma recycling engine, harvesting volatility. And this brilliantly illustrates the mechanical heart of the thesis and our core mantra. Cash is trash, cash flow is king. Volatility equals cash flow. We don't try to time markets, and we certainly don't sell our convictions. Instead, we mechanically harvest the market's chaos to fund our ultimate goals.
So here is the plasma recycling protocol in practice. Step 1. Capture volatility via high-yield plasma assets. Step 2. Extract those double-digit percentage distributions as cash. And step 3, which is honestly the secret to sleeping at night, mechanically recycle that cash directly into your king piece, your spot Bitcoin. This mimics the Sailor flywheel, bounding your downside risk while relentlessly capturing the upside.
The statistical robustness of this engine is just incredible. To put that into perspective, when tested across 10,000 Monte Carlo simulations, this protocol mathematically outperforms a naive passive holding strategy in 93% of simulated futures. Mechanical discipline beats emotional market timing almost every single time.
Finally, Section 6, Achieving Cosmic Alpha, the final realignment.
To capture true terminal sovereignty, your first realignment is thematic. The math dictates rotating 100% out of legacy hydrocarbon positions to heavily scale up New World nuclear baseloads, specifically uranium and small modular reactors. Why? Because this is the exact liquid infrastructure required to power the massive, undeniable energy demands of our AI and Bitcoin future.
Let's move to this next one and see how this builds your sovereign action list. The primary architectural gap right now is that the portfolio has 75% Bitcoin beta, but effectively 0% direct spot Bitcoin. The king is missing from the board. The absolute #1 priority for your own portfolio should be fixing this gap. Acquire direct spot Bitcoin to capture the uncapped upside of the $1 million bull case.
Of course, execution requires a strict operational timeline. Week 1, reset the Digitarium goal to a mathematically viable multi-year horizon. Week 2, liquidate those 100-plus decorative tail positions that make up less than 6% of the portfolio but consume huge mental bandwidth. By month 1, complete your rotation to nuclear, and by quarter 1, fully establish your spot Bitcoin crown layer.
This explainer lays out a roadmap for a multi-decade compounding mission. It strips away the behavioral errors that destroy wealth and replaces them with a regime-adaptive, thermodynamic machine. So as you look at your own terminal sovereignty portfolio, I want to leave you with this final provocative thought. When you look at the ledger of your life's work, is your capital governed by hope or by math?